Erian warns inflation hasn't peaked as energy prices rise. Mohammed Erian, who nearly 12 months in the past appropriately forecast that accelerated U.S. inflation would be chronic, says it hasn't peaked. The intently followed bond market strategist has the same opinion, with monthly consensus estimates for May's client price index to be mentioned on Friday, but told television's The Open on Thursday that, "What issues me is that the June month-on-month print might be worse than the May month-on-month print." Those who boldly said inflation has peaked and is coming down may additionally must alternate their minds. Read greater. Today's price action shows U.S. CPI could deliver a nasty shock. The CPI for April rose 8.3%, down from 8.5% the prior month, but still near the most important growth in many years. Annual inflation in all likelihood climbed at an 8.2% tempo in May, in line with the median projection in a survey ahead of the release Friday. That's nevertheless greater than 4 instances the stages seen before the pandemic. It wouldn't surprise me if we see a headline print better than 8.5%, although no longer as early as subsequent month, Erian stated. Because the drivers of inflation are broadening. At the headline level, strength costs are going up month-on-month quite dramatically. We see strain on safe haven and food. It's way too early to mention inflation has peaked. Inflation erodes the cost of bonds, fixed bills. The 10-year Treasury has lost almost 12% this year amid a decline in many economic assets, according to the S&P U.S. Treasury Bond Current 10-Year Total Return Index. In July, Erian expected that inflation, at the time running at a 5.4% annualized pace, wouldn't be as transitory because the Federal Reserve was projecting. On Thursday, he said the Fed made a policy mistake on inflation, regarding the central bank no longer tightening financial coverage by lowering its balance sheet and elevating charges till this year. While a few economists see the Fed's rate hike regime as probably to push America's economic system right into a recession, Erian, an opinion columnist, says this is his risk state of affairs. Stagflation is my final analysis. Be cautious what you wish for. If you consider the labor market remains strong, wages stay buoyant and begin catching as much as inflation, then it's difficult to see inflation coming down, he said. But if you assume we're going to have a recession, sure, inflation goes to come back down, but that's not the type of transitory inflation that absolutely everyone wishes. The chair of Gramercy Fund Management and leader monetary advisor at Allianz ETR, ALVG SE says the Fed have to make a desire and keep on with it. The worst component is the flip-flopping Fed, the Fed that hikes costs, and then pauses in September, after which begins trekking again, after which pauses again. That could simply suggest that stagflation could persist an awful lot longer than it needs to. Read greater. U.S. inflation may lie ahead, core elevated in 2023. Copyright 2022 LP.